Don Palmer, Finance Director for the city, and I'm here to present the Comprehensive Annual Financial Report for fiscal year ending September 30th, 2013. These financial statements are comprehensive in the sense that they measure our net position as of September 30th, 2013. It's a snapshot, so it tells us where we're at financially at that point in time. And it also measures financial performance over the previous 12 months to that time frame. When we go through this report, we will be submitting this report for the 11th GFOA award in financial reporting, certificate in financial reporting. And I believe that we need to acknowledge several people, not just myself and President Gage in this, but the people that help support that, and that is Sue Nelson, our accounting manager, and the entire accounting staff that work on this project. And then besides Mitch, he's got somebody, Nick Nicholson, that also works on that, and they make us look pretty darn good when we put this thing together. Also, I want to acknowledge the Audit Committee. We started the Audit Committee about 10 years ago, I believe, and it was back when what was his first name? Hill was
Jack Hill.
Jack Hill was on the City Council, and we started that back during that time frame. And John Farbo and Marla Kraut are the two that represent that committee, and they've done a phenomenal job of going through it this year and really going and making sure that we make some significant changes that help us with our governmental accounting standards. There are little things that we see so much of that it's good to have a set of fresh eyes to do that. So Mitch will be going through, when we're confident enough that we've had enough review through the Audit Committee and all the staff, Mitch, myself, and Nick, that we think that this will win the 11th GFOA award as well, because we've also, in this particular financial statements, have some new governmental accounting standard board pronouncements that we've had to approve and incorporate in this, and then Mitch will go through those highlights. So Mitch will go through the first part of this, and then I'll go through some comparative analysis, and I'll turn it over to him to start that process. Thanks, Mitch.
Thank you, Mr. Mayor, members of the City Council. My name is Mitch Marks from President Gage. Like Don said, what you have in front of you or should have is the published Comprehensive Annual Financial Statement, CAFR. There's very few CAFRs presented, I think, or prepared in the state of Idaho. This is quite an accomplishment to do. It takes quite a lot of work to put together. It's quite informative. I think when we talked about economic development earlier in the evening, a lot of entities will get your CAFR and use that as a help decide whether to come here, because it talks about the 10 biggest taxpayers. It talks about your economy. It talks about a lot of different things in the statistical section that's used. So the audit report itself, the layout and content, that's governed by governmental auditing standards, the GASB, and it's according to generally accepted accounting principles. I've had questions over time, can we change this letter and such, or this different presentation? We are stuck with a lot of the wording. If we vary from the letter, they'll come up and you won't get the certificate because the audit report doesn't match or the presentation doesn't match. So this is a standard format that we are required to use. As Don mentioned, during the current year, they adopted two new standards, number 63 and 65, and you'll see a few little different things in here this year. One of those you've had in the past, when you issue bonds, you've got the cost of issuing the bonds, and you amortize that over several years. Under the new standards, that is no longer there. You take that away. One of the notes to the financial statements talks about that, and I think it was about a $335,000 adjustment from what last year's financial statements were to this year's because of that new standard. You also see, as you look at this standard, 65 talks about inflows and outflows. They like to add things, new verbiage and such. You won't see a lot of the word deferred revenue anymore. You'll have unearned revenue, and that's part of that GASB 65 and some of those changes. So as you look at this, it's a little bit different in the past. because of the different language. One of the difference, Don mentioned net position. You'll find that everywhere in here this year. Past, we talked about net equity. Now, with the new standards, it's net position. So it's just a different way to the title things. The audit report itself is on page 14 and like 15, 16. It actually is a lot longer this year. This is one of the things they did change. It actually has subsections in it now, so they're trying to be a little more clear on, this is the financial statements. The financial statements themselves are the management's responsibility. Our responsibility, and next as you go down is we have a paragraph or two that talks about the auditor's responsibility when we do our audit. We talked about the CAFR. So there's a section that talks about the supplemental information, the management discussion analysis, the budget to actual requirements. They have their own section, and we talk about those. And then we have a section that talks about the opinion. There's several different sections. Like I said, it expanded, made this quite a bit longer than it was. When we're all done, the city received an unqualified opinion on the financial statements. This is the best you can get. Means we did not find anything during the course of the engagement that felt that the city was not presenting their financial statements in accordance with the generally accepted accounting principles. And so that is what that audit report says. I don't have the page numbers, but there's also two other opinion letters in here. They're toward the very back, and one of them is related to the governmental auditing standards. This is because you are a city, and basically that talks about internal control as well as compliance. And as we did the audit this year, we did not come across anything that we felt the city's internal control system or their compliance was not according to standards. And so they changed the name. That's not an unqualified opinion now, that's an unmodified opinion. And so that's just a little different. It says pretty much the same thing. Because the city expends over $500,000 of federal financing, there's another opinion letter in the back that talks about the Single Audit Act. And that's the same type of thing. It talks about internal control as well as compliance. And
that's on page 112.
okay.
The first one was on 110, the second was on 1.
While you're on that, if I may,
Go ahead, Wayne.
on 113 on your report on internal control over compliance, you make a comment in here, you say that we did not identify any deficiencies in internal control over compliance that we consider to be material weaknesses. And then you go on to say, however, material weaknesses may exist that have not been identified. I assume that's put in there more as a disclaimer than anything.
And that's one of those things they changed this year. That's brand new in this letter that wasn't last year. They have modified that says, okay, we didn't find anything, but now we have to say that that doesn't mean they're not there during the course of the engagement.
You knew that from last year, that this was new, right?
Yeah,
Yeah.
of course. Oh, I remember last
Go
year's
ahead.
verbatim.
Please
So-
continue.
So that letter also has the an unmodified opinion on the internal control and the on your client. The audit report itself is in quite a few different sections, and that just is a little summary of where everything comes from. To do a CAFR, you basically are going to have the introductory section. You also have to have the statistical section. The rest of that, you're going to have the audit report. You have to have a management discussion analysis to do a CAFR. You're not really required to do that. If the city did not want to do a comprehensive annual financial report, you actually do not have a MD&A, and it's not going to be a substandard report. You have the notes, required supplementary, and the combining statement. So that's the layout of the report. The fund overview, you have the major funds, and major funds are defined by numbers, by basically if you exceed like 10% of a total of like the governmental funds or 10% of your proprietary funds, and then you exceed 5% of the total of the citywide, you're considered a major fund. And you have several. You have the general fund, the streets, Parks and Rec, your capital projects, and the Hamilton Fund. The non-major funds are the ones that aren't the larger funds. We've got the Transit Center. That's also new this year. You did not have a fund for the Transit Center last year. I think that was completed in December of 2012, and the operation started subsequent to that. So this fund just shows that operation from that point, and it's the operations, not the construction. You have your water, sewer, and sanitation for your enterprise funds. Basically, the general fund is the fund that's used to account for all funds not required to be accounted for anywhere else. That's your general administration, your public safety. A lot of things are in there of that nature. Your special revenue, ones that are, the revenue is specific for that purpose. They changed the standards a couple years ago. They wanted to get a lot of these collapsed. If you didn't, they want them actually in the general fund, which I think would sort of mislead. You know, if your Parks and Recreation Fund didn't I think the word they use significant revenue from its own operations, they wanted that to be part of the general fund. We've taken the position, the city has, and we have in the presentation of the audit, that the revenue is significant, and as Don mentioned, you received your certificate last year from GFOA, so obviously they did not find any issue the way we presented that. Did you want to do this part from here on? Good. Basically, you look at the, this is just a chart on your general fund streets, Parks and Rec, on your fund balances, you know, from like 2009 to 2013. You can see the general fund's rising slightly. Street funds been up and down a little higher than last year, and Parks and Rec is just a little bit lower. And the enterprise funds, like mentioned, you have the three, and you actually have two funds in your accounting system for each one of these. You have a water fund, you have a water capital projects fund, sewer fund, capital project. So there's actually 6 funds that are combined into these three when you show it on the financial statements. These are different accounting. This has depreciation. This has capitalization of your assets. Your debt is shown in these funds where that is not shown in your governmental fund types. I'll turn it back over to Don. He'll go over some of the revenue, expenses, and changes from the year.
The water fund, basically the revenues are exceeding the expenses, and that's mostly because we haven't gotten to the capital expenses yet. There's about $3.5 million sitting in the capital reserve fund for capital projects in the water fund, and that's designed for some of the things that we've been, shoot, I would hit that by accident. That would be designed for some of the things that we had in the rate study, reservoir, line replacement, well number 10 is going to be funded with capital funds or debt service funds, so the bond proceeds, so that's not part of that project. And so that's why you'll see revenues exceeding expenses, and they're beginning to match in 13. The water's net position, the green is the water capital accumulation. We're building those funds up for those projects. 2012, or the blue is basically the operating fund, which is the working capital. It's fairly stable and moves as the budget for the subsequent year moves at 25%. The sewer fund, this big blimp, the purple line is the bond proceeds, and then the blimp above the black line is the refunding of $6.87 million. That was called an advance refunding. That's why there's this delayed expense that occurred in 13, but the bond proceeds were in 12. It was advantageous to take advantage of the low interest rate in 12 as opposed to 13. Rates have gone up slightly since then. The sewer's net position is, this is just only the sewer capital accumulation and the sewer operating fund, and the operating fund is stable, but the expenses, the green accumulation piece is down about $1.82 million, and that's because we've done projects this year for that, namely the one out by the U of I.
Don, if I may,
Go ahead, Walter.
you said the operating fund is stable. If that's the blue bars, it doesn't look stable to me. Did I misunderstand?
Well, it's fairly stable because of the piece that you see. This is only measuring the working capital piece. It's not measuring anything else. And so the debt service fluctuates. This does not show the overall net position. Mitch and I were commenting on that earlier. We're only trying to measure what is the operating fund and what is the accumulation for the sewer capital accumulation fund. And so there's about $1.2 million sitting there in operating funds that are being carried over into the subsequent year. So,
Okay,
that answer
thank
your
you.
question?
Mhm.
The sanitation fund, the reason the revenues are above the expenses on this one is we've not spent any money on capital as part of the rate study. We will be in well, it shows in the 14-15 rate study that we will be building the recycling center expansion project, planning and design and future outlay. And Tim will be bringing that forward hopefully sometime in the summer, at least as far as a concept. So that's what we've been talking about recently. I think we're going to have to delay that a year as we work through facility planning and stuff like that. But that's the reason you see that black line on as far as revenues, and the expenses are only the operating expenses. And the reason they're so stable on the expense side of this equation is because we have some very tight contracts, and they only go up by the CPI adjustments, and so that's the only change that you would see there. Sanitation's net position, again, water or sanitation capital accumulation is the piece that's growing mostly. The operating fund is staying stable. The highlights for 2013, and I also show some operating expenses across the board citywide. Constructing the pole barn building that was used for public safety. We bought 2 police interceptors. They paved Mountain View parking lot. Finished that up in 2013. Phase 2 of the Intermodal Transit Center ITC construction project was in 13. And actually 2012, December was when it was finally completed and launched. And then the sidewalk program was a big piece of that, and then College Street. General fund revenues expenses. This slide is to show general government and public safety. General government's fairly flat all the way across for the last 5 years. Public safety's climbed just slightly. What is general government? General government is these sections here: community development, legislative, executive, admin, finance, legal. Need to read it for you. Police is police services, operation services, animal control, dispatch, public health, engineering, parking services, and fire control and prevention. And then we show slides for those items: engineering, fire, and police. They're pretty. Police has grown slightly. The others are fairly stable. And then most of that, I think, I attribute to the COPS grant that we got a couple years ago. We're going to be ending that in the end of December of 2015, I believe. And then in general government and non-departmental expenses, most of those are the transfers. We transfer out to capital projects to match so we can have funding for the projects that we've been doing over the last 10 years. What is culture and recreation? Parks and Rec admin, parks, recreation, the swimming pool, the youth center, the Herrick Center, the 1912 facility, and art fund. Culture and recreation expenses. The largest one is the expense for 2013, but that's due to $2.1 million in debt retirement when we closed out the certificates of participation. It was a smart move to do that because it saved us several $100,000 down the road. The street fund expenses, you can see that the revenue is the very top line. It's really, it's kind of deceiving on this graph because it's so stable. It shows every little fluctuation, but the revenue is really flat. It has been for 10 years. It hasn't fluctuated in the last 10 years, 75 to 100,000. In fact, if anything, it's gone down over the last 10 years. You can see the dip in 2010, and it slightly picked up to a little bit over the 2013 year. I would attribute that mostly to the highway tax more than I would the gas tax monies. Any questions?
Gary had something you wanted to comment on.
Yeah, I think you need to, on that last slide, you need to understand that the bottom legend there, revenue and transfers in. So the general fund does transfer monies into the street fund,
Good point.
which also, if there is a big overlay project, council wants to throw some more money at it, then it will show that revenue line increasing. When, as Don said, the gas tax, road and bridge tax are fairly flat.
So it's real difficult without that transfer to do some of the projects that we've been doing over the last 10 years. It has to be from general government services to do that.
Walter, you have a question?
Yes, if I may, a couple of them. Don, I noticed the term business-type activities appearing through this. Is that a new term, or has it always been in there and I've never paid attention to it before?
It's always been there, but it's the enterprise funds.
I know, I figured that out,
Yeah,
but
yeah.
the terminology threw me because I wasn't,
Business-type activities refers to items like depreciation and capitalization are treated somewhat differently. But more and more, and I think you'll agree with me, but the governmental funds are becoming more and more like that. To the most extent, you want to add anything to that?
Well, as you look at the statement of activities, that's on exactly the same basis as the governmental funds, because the depreciation and debt service is shown when you look at that statement of net position and statement of activities, that is supposed to be presented just like if the city was totally ran as a business. So it has all that in it. Then you go back to the balance sheets and they'll change, and they have the reconciliation after each one of those that will show the difference. But it is getting, they want to show that, and so you can make a good comparison.
okay, thank you, and if I may.
Okay, go ahead, Walter.
When did we pay off Fire Station 3's bonds?
Remember, Gary?
October,
The
October 2013.
last
yeah?
October was
last October for the, which ones?
the
Fire Station
number
3.
It was either October or November.
Yeah, I think, yeah, that's right.
So this statement ending September 30 should reflect the Fire Station 3 bonds?
It would have happened after that.
Yes, that's after October 1st, so it'll be on your next audit.
But it should appear in these statements.
The station, the bond
Bond.
should, yeah.
Yeah, yeah, Gary's right. It was paid in November 1, and it had a final balance of 280,000, and now that's gone.
Okay.
You'll see
No,
that.
that actually was paid off in 12, 13.
That's
No ending balance.
yeah, that's what I mean. But it was paid off this year during this audit.
Oh, during the audit year, correct.
Yeah, 2013, November 2012, which is this fiscal year.
So it's been over a year.
So it's been a year away. Yeah.
Oh, okay.
Okay. Wipe it. When were they paid off?
November 1, as Gary pointed out,
Of 2012.
of 2012. Well, no, calendar year 2012, but this fiscal year 2013.
I think
Because-
Walter's saying, when was the payment made?
Let me
The
ask you,
actual
let me,
Okay.
I didn't mean to get all wound up here. My question is, looking at page 60 of the statements, the long-term debt, the GO bonds, lists the swimming pool. I don't see the fire station. That's what prompted my question.
Oh, I see. It's because it's paid off.
Okay. Didn't say the statements were wrong, was just trying to understand
Yeah.
What happened there?
what happened and when the fire
I was trying to
station.
get to the root of your question. I was asked something wrong, so I
The
apologize.
root was that I couldn't remember when we'd paid it off. And then one last question, if I may.
Okay, go ahead, Walter.
Page 74, I should know this, but I don't. What is HUD reserve?
Very much.
Oh, the fund itself. Okay. That's the housing fund that was created, back in the 90s, 80s?
Was that,
And then it
yeah,
was,
late 70s, I believe.
and then it required, it goes on for 20 years as far as payments for it was Housing, Urban, and Development is what it stood for. And then so, I think about 2000, well, it was when I was here, so 2003 or 4, those were finally completed, but but we had some delinquent payments, and I believe all of those are paid off now, and so that reserve fund is just sitting there with the funds available to transfer over to projects. And I think we've been transferring funds over during each fiscal year for sidewalks or whatever projects that the council wants us to set aside for.
I was just wondering if we could get rid of it,
We could in the
hopefully by using the money somewhere else.
we could do that in the next fiscal year. Yeah, it would still show up because we would have to budget for closing it. But yes, we could do that. I think that I'll have to double check, but I believe all the receivables are in. I'll have to double check that. That's the only reason that fund still exists is because of the receivables that are still outstanding.
If I may.
In fact,
Gary?
A lot of times, the houses were improved with HUD funds, and the payments weren't made. People waited until they sold the houses, and then we would get our funds. So I was unaware that they were all paid off at this point, but that's certainly something we can look at in the
Well,
budget.
Mitch just answered the question for me. They were completely paid off in the 2013 fiscal year, so
Okay.
now we can.
Great.
Okay. John?
Don, good report. It's been a number of years, 4 to be exact, that I've listened to one of your presentations on this, and every time you do one, it's more concise, more to the point. And that's a compliment. I think the printed material that goes with it is very self-explanatory, so thank you.
You're welcome. There'll be a book signing at the end of this, and we'll sell these books.
Anybody else have other questions for Don or Mitch?
Well, Your Honor,
Yes, sir.
then I would move that we approve and accept the audited comprehensive annual financial report for fiscal year 13.
Okay, Dan made a motion to accept the report as it is, and Tom seconded that motion. Any discussion before we go for a roll here? We'll start with John.
Aye.
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 Aye. Thank you, it is passed. Thank you, Don. Thank you, Mitch.